We are preparing you for the coming market crash. You will see attached to the show notes, if you're a subscriber. If not, go to chartingwealth.com and become one for free. You'll see attached in those show notes a link to our latest training about the coming market crash and how you can be prepared for it, to not lose your fortune and, in fact, to make a fortune. If you will study with us every day, 10 minutes. That's all we ask. Learn to read these charts. Remember, it's primarily a binary decision. Do you get in or do you not? Whenever you analyze a stock or an ETF, and we teach you how to analyze all of them in one, well, actually two methods. We have the weekly vertical crossover jumping in point, and also when the 2-day and the weekly are moving in one direction, waiting for a pullback on the 4-hour, and then when it corrects and moves in the same direction, you jump in. When we're talking about time periods, we're talking about different size charts. We have a weekly chart, which is typically what we start with. We also have a 2-day, and we have a 4-hour. And everything we talk about here is as simple as we can make it, but not simpler. We use Occam's razor. That is a principle we talk about quite a bit here at the channel, of keeping things as simple as possible. And as Einstein said, make everything as simple as possible, but not simpler. That's what we've tried to do. Why? Because Occam's razor, or Occam's principle, teaches us that the simplest way is almost always the best way. You can have information overload and analysis paralysis, and we stay away from that. We talk about action here at Charting Wealth. So, you want to get that training, go to chartingwealth.com, sign up for free. It'll be attached in the show notes. So those of you who are already signed up, look in the show notes. You'll see it under the latest training right there toward the top. Okay, let's jump into these charts. Stocks are a little mixed for the day. We see the S&P 500 down, while as the NASDAQ 100 is up. So let's jump into the S&P 500 first. We see that a weekly candle is forming a green up candle, and it's only we're now 3 days into this 5-day candle. Down a little bit for the day, 0.31%. Derivative oscillator losing momentum, but that price percent oscillator is still heading up rather nicely. We see price movement is well above where it was over the last 3 weeks, which is what we like to see. And also price movement's pushed above that weekly trend line. So we go from the weekly to the 2-day. Take a look at that. And again, the 2-day chart about flat, actually heading down a little bit on that price percent oscillator. Now, of course, we had the prior 2-day candle end on Monday. This latest one has just ended today. And again, it is an up candle pushing higher than the prior candle, which is good as far as our Heikin-Ashi candlesticks go. Price movements above the 2-day trend line. But we see some problems with the price percent oscillator. It's weak. Derivative oscillator is positive. And of course, what are we waiting on? Well, we've talked about this in the last few days. We're waiting, of course, on a pullback, which is underway. We have a crossover at the end of the day going down on the 4-hour chart. Now, again, as we just said at the beginning of the program, things were heading up on that 4-hour chart. We had the 2-day crossover. Last thing we wanted to do is jump right in after the 2-day crossover. Why? Because many times there's a pullback. That's what we're waiting for. And again, if this pullback turns back around after crossing over, which it has done, that's our jumping in point when it heads back up again. Why? Because you can't catch a falling knife. It's very hard, to do so. So what we do is we wait for that pullback. And again, it may not go back up. The market could possibly have topped out. If it has, then we're done. But if it does cross back over and goes up, as the Qs did recently, that's our jumping in point. So we'll wait and see what we see. If that 2-day chart on the S&P crosses over and goes down, then we're done. We don't have a trade at that point. We'll wait for something else to set up. So what we're waiting for now is to see if and when this 4-hour chart crosses back over going up. I'll show you how that occurred on the Qs as we go to it next. Qs was up for the day. Again, that's the NASDAQ 100, up 0.41% quite nicely. Now, we see that we have a nice green up candle forming well above the prior week's candle. Derivative oscillators just about flat. That all-important main indicator, the price percent oscillator, is heading up quite nicely. We go from the weekly to the 2-day. What do you see there? Well, you see that 2-day chart pulling away quite nicely from the red signal line. Just what we want to see, price movements well above the 2-day and the weekly. Green up candle, that's very beautiful. We go to the 4-hour chart. What do we see there? Well, what I was talking about, we had a pullback that occurred on the 4-hour chart, and we were waiting for that pullback to end. It did. The 2-day and the weekly were still in a confirmed up move, and when it crossed over, we had a jumping in point after that crossover in the somewhere in the afternoon. Make sure I've got that right. Yes, in the afternoon, we had the crossover going up, the jumping in point around noon or so on Tuesday the 12th. And of course, I hesitate to use Heikin Ashi candlesticks for a jumping in point. Somewhere we'll say around 175. And again, Heikin Ashi candlesticks are average pace candlesticks. They're calculated differently. Those of you who are used to regular Japanese candlesticks, high open, low close. These are calculated differently, but they help us track the average pace of what's going on with price movement. I think, and most of the students who listen to the channel and the traders and investors that listen to us, they also follow my recommendations, and it's easier to see price movement in real acceleration, deceleration, just seeing the average pace. And that's why we use Heikin Ashi candlesticks, but somewhere around a jumping in point of $175. And we have seen things actually spike all the way up to $180.86. That is beautiful. Now, so we had a jumping in point there on the afternoon of Tuesday the 12th. And of course, once we jumped into that practice trade, we reverted over to our 2-day and our weekly charts to tell us to stay in or not. You don't want to be a slave to your 4-hour chart. You want to pay close attention to what's going on those larger charts once you make your jumping in decision. So, what do we see going on now? The only real concern we have is at the end of the day. We've got a screwy candle at the end of the day. We see that it's a green spinning top with a long wick on the top, which is good, and a wick on the bottom too. Just sort of a bizarre, weird candle. So again, just keep your eye on things. We had some real spikes in there. Ended the day up 0.40%, which is quite nice. So just keep your eye on the prize. And of course, we have done quite well in just the last few days, somewhere around $5 or so in up movement, and that is quite beautiful using just our standard method. So again, how high will it go? We don't know. We're trend followers. We'll let the trends lead us. That's where we are as we leave stocks and go into bonds. Bonds up the most for the day, 1.04%. Bonds are trying to move up, it looks like. We're in our second week of decent up movement so far. Price movement still below where it had been over the prior week, so we've not crossed that line yet. The derivative oscillators still negative. Price percent oscillator, those spiking up quite nicely. We go from the weekly to the 2-day. 2-day is, well, looks like it's actually ended the day crossing over, going up. That's good to see. Going in the same direction as the 2-day as the weekly chart. So the 2-day moving in the same direction as the weekly chart. We shall rotate things over. And again, bonds have been sort of scattered around trying to figure out what they want to do. But now we have confirmation of a 2-day crossover. That goes with the weekly crossover going up. And we look at the 4-hour chart. And what do we see there? We can see that spike up in the morning, followed by an even bigger one in the afternoon. So we shall wait and see if bonds do pull back at some point and give us some type of jumping in point. Don't want to jump in right here. Quite dangerous after that spike up at the end of the day. You don't want to jump in at the top and then get hammered as it comes down. So we'll patiently wait, see if there's a pullback and a potential jumping in point on bonds. Lastly, We go to gold. Gold up 0.65% for the day. Now, darn it, just won't cross over going down, will it? We keep hoping to short gold. Those of you who might be new to the channel are saying, why do you want things to go down? Because we have things called inverse funds, or shorting the market, or shorting gold in this case. There are other funds like DGZ, that's Delta Golf Zulu. That is a short fund of gold. It moves in the opposite direction of gold. So, with a little bit of sophistication, you can do a successful practice trade when gold goes down and make money with the reducing price of gold. Or, of course, you can just take your profit, that is your virtual profit, we're not a stock calling service, we're an education firm, in gold and let things move down. But we don't have that confirmation crossover. That's what's not happening. Derivative oscillators continuing to go down. We have a green up candle and an up movement in gold. We just can't get, looked like at the beginning of the week we're going to have a crossover. Ain't happening right now. May happen before the week's out, looking less likely. We see on the 2-day chart, price percent oscillator heading up, derivative oscillator losing momentum, and a lot of green candles going up on that 2-day chart, passing through the 2-day trend line, the prior down trend line. Still in a confirmed down move, but looks to be heading toward an up move. We'll just wait and see what we see. That 4-hour chart, of course, continues to, well, it's tracked sideways quite a bit, but angling, trying to angle up since it bottomed out somewhere around the 121.40 mark. So we'll just continue to watch gold and see what we see there. So we're continuing to track our successful entry point into the NASDAQ 100. We're waiting to see how things are going to shake out in SPY as the 4-hour chart is in a reversal pattern, hopefully going to give us a jumping in point. Same thing with TLT, 20-year bonds. We've seen the 2-day chart move in the correct direction. Now we've got to wait for the 4-hour chart to reverse and give us a potential jumping in point, and gold just can't get sorted. That's where we are, folks. Again, don't forget we have that special training for all of our subscribers in the show notes. If you're not a subscriber, you need to subscribe. We'll run that training in the show notes for the next few days for you. So go ahead and become a subscriber. You get all the good stuff. And of course, if you really want to help us, buy our book, Charting Your Way to Wealth, in its 8th printing right now. We'll send those right out to you. If you happen to be listening to us somewhere out of the United States, we will get you a copy. All you have to do is write us CW at chartingwealth.com. That's C as in charting, W as in wealth, so CW at chartingwealth.com. We will send you an invoice on PayPal. Pay that, and we will send you your book wherever you are in the world where mail is delivered. We've been getting a lot of international orders lately. And also, if you want the real goodies, become a Patreon supporter. We've got all, you can even, in fact, depending on your level, get a free book there. And we also have a special monthly question and answer session for our members, along with analyzing the stocks and ETFs you are interested in. We have another special broadcast that we do for you there, and special trainings. So my friends, thank you so much for being with us. We always love to hear from you. Again, the email address, cw at chartingwealth.com. You want the special training we've just put out, make sure you're a subscriber at chartingwealth.com for free, and you'll get that goodie too. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.